you might be hearing terms like market rotation, quote unquote, on CNBC, other financial media outlets. But if you're not following those channels closely, you may not be hearing it, but it's definitely a hot current topic in the market. So I think the question I have is, what does market rotation really mean? And why does it matter to investors? And I think kind of I'll take the initial stab here is, what is a market rotation? So to do a little bit of a jargon breakdown, a market rotation happens when the previous leaders of the market are no longer the leaders, and maybe some of the parts that haven't been doing well start to do better. So think about it. Markets are rotating from one group of winners become the losers become the winners. It's kind of that rotation that you see. And honestly, that's usually a very healthy thing in the markets overall. You never want one sector or a handful of names to always be the best performers, and they will never be the best performers forever. But what you want to see is eventually some of those ones that maybe have underperformed to start to catch up a little bit. And I think kind of looking at it specifically with the market we're in now, we've been talking about these large cap growth, large cap tech, the Magnificent Seven, as they've been kind of coined or given the nickname, have been so strong for so long. Well, they're off to a rough start here in 2026. And I think, when you hear the Magnificent Seven, those 7 companies that have been the top performers for so long, they become so popular that there's now an ETF out there that you can buy to get exposure to just those 7 companies.
That's great. In case you're too lazy to just go out and buy 7 stocks, you can buy an ETF.
Well, and pay someone to do it too. Don't forget, ETFs have the embedded expense ratio. So you're paying someone to just go buy 7 names and basically hold them.
Hey, you can also go out and buy fart coins. So, there's all kinds of things out there. But please make your point. I'm sorry.
I think, and that's kind of what the whole point is they become so popular that people buy this ETF, the Round Hill Magnificent Seven. The ticker is MAGS, MAGS. So I'll just call it MAGS from here on out. 2025, it was up 23%. Yay, good for you. That's awesome. The S&P 500 was up 17. The average stock, so if you look at kind of the average stock by looking at a different index, the equal weighted S&P 500 was up 11%. So Magnificent Seven companies, those 7 names were a reason you were doing so well and the index was doing so well. Well, let's look at 2026. And I know it's a short time period. We're recording this at the end, so it's only end of January. It's only been a month. That MAGS ETF is negative, about 0.5% roughly as of Friday. Average stock, that equal weighted S&P 500 is up 3.7. So what are you seeing? You're seeing a rotation out of those Magnificent Seven names, and the average stock is starting to get more strength. And that's really, I think, again, a healthy thing. Those 7 companies weren't going to be the best performers forever in perpetuity. The concentration risk you've been hearing about in the market, that there's only 7 companies that are pulling the index returns to all these levels. Well, now it's all kind of the other names are starting to perform really well. And what does it really, I think, mean for investors? That's maybe a question we can get in here next, but that's what a market rotation is when you see it, the top performers start to lag some of those worst performers over some time period. 2026, we're starting to see that rotation happen.